If a fund manager trades stocks using information the public doesn't have, they go to prison. If a member of Congress does the same thing, they pay $200. That's not an exaggeration. That's the actual fine under the Stock Act, the law passed in 2012 that was supposed to end congressional insider trading. $200. And in the 14 years since the law passed, not a single member of Congress has ever been criminally prosecuted under it. But here's the thing. They didn't anticipate when they wrote that law. Every trade still has to be disclosed publicly. The name, the ticker, the date, the approximate dollar amount. Which means anyone paying attention can see exactly what's happening. Today, I want to walk through 3 real cases, 3 members of Congress, 3 different trading patterns, and ask the question most financial media doesn't bother to ask. When you put the trades next to the committee seat, what do you actually see? The setup. How Invyra tracks this. Invyra's Congress Tracker pulls directly from Public Stock Act filings and tracks the 15 most active traders across both the House and Senate, updated in real time. You can filter by trader, by buy or sell, or search by ticker to see which Congress members have positions in any stock you're researching. The data you're about to see is all public, all legal, all disclosed. What it means is a different question entirely. Case 1. The Budget Chairman, John Boozman, Republican. Senate, Arkansas. Chair of the Senate Appropriations Committee, the committee that controls every dollar the United States federal government spends. Defense budgets, intelligence contracts, infrastructure, every agency, every program, every contract. If you want to understand where government money flows before it flows, this is the committee to watch. On May 15th, 2026, Senator Boozman bought shares in Palantir Technologies. The disclosed amount, $1,001 to $15,000 per Public Stock Act filing. Now, $15,000 is not a large trade. But the question was never about the size. The question is about what Palantir actually is. Palantir runs 2 core platforms. Gotham, built for intelligence agencies and defense departments. It's what the US military uses to process battlefield intelligence, track threats, and make targeting decisions. The second platform, Foundry and AIP, is commercial. But the government segment is where Palantir was built, and it's still the foundation of the business. The company's revenue depends, in significant part, on government contracts that go through the appropriations process, the process chaired by John Boozman. Is that a coincidence? Maybe. Is it legal? Yes, fully disclosed, but it is a pattern worth understanding. Here's what Invyra's models show on Palantir today. IQ scores 6.1 out of 10. Hold. The Prism signal, hold. Low confidence, signals not yet aligned. Financial health, strong. 4 out of 4 checks passed. ROIC at 22.5% against a WACC of 12.5%. The business is genuinely creating value, but the IV engine places fair value at $98.88 against a current market price of $162.66, a 64.5% premium to intrinsic value. Narrow moat. Defensible, but requires ongoing investment to maintain. The business is real. The fundamentals are solid. But at this price, the market is pricing in a significant amount of future contract flow, and the man who just bought the stock chairs the committee that decides that contract flow. That's the question Invyra puts in front of you. Not what to do with it, just the data, laid out clearly. Case 2. The Wall Street Senator Dave McCormick, Republican, Senate, Pennsylvania. Before entering politics, he was the CEO of Bridgewater Associates, one of the largest and most sophisticated hedge funds in the world. He now sits on the Senate Banking Committee, which oversees financial regulation, banking institutions, and housing policy. His wife, Dina Powell McCormick, spent 16 years in senior leadership at Goldman Sachs. Invyra's profile of McCormick describes his approach in one line: concentrated strategy, heavy Goldman Sachs position. In late May and early June 2026, he bought Goldman Sachs twice, each transaction in the range of $100,001 to $250,000 per Public Stock Act filings. This is not a diversified portfolio. This is a deliberate, concentrated bet on one stock. Now here's what makes this interesting. Here's what Invyra's models show on Goldman Sachs today. IQ score 4.9 out of 10. Hold. The IV engine places fair value at $594 against a current market price above $1,050, a 77% premium to intrinsic value. Wide moat. The business is strong, but the models flag the valuation as significantly stretched. Most investors see that 77% premium and pause. They wait for a pullback. They look for a better entry. Dave McCormick, the man who spent his career running one of the world's most sophisticated macro funds, looked at that same number and kept buying. That's worth sitting with. The Senate Banking Committee, which McCormick chairs, has direct oversight over the regulatory environment for major financial institutions. Goldman Sachs operates inside that regulatory environment. When rules change, capital requirements, trading restrictions, M&A approvals, Goldman Sachs is directly affected. He's not accused of anything. Every trade is disclosed. But when someone with that background, that committee seat, and that personal connection to Goldman Sachs builds a concentrated position at a 77% valuation premium, the question isn't whether he's wrong. The question is what he might be seeing that the models aren't. Case 3. The One-Way Trader. Kevin Hearn, Republican, House, Oklahoma. His Invyra profile note reads, only sells 15 plus consecutive sell filings with 0 buys. Liquidation pattern. Not a single purchase, just a steady, consistent exit across multiple positions over multiple months. His largest disclosed sale? ExxonMobil, July 2nd, between $100,001 and $250,000. Per Public Stock Act filing. Hearn sits on the Ways and Means Committee, which oversees tax policy, trade, tariffs, and social security. It's not a committee with direct sightlines into individual companies, but it does have early visibility on the broad direction of economic policy. What gets taxed, what gets subsidized, where the fiscal priorities are heading. When someone sells everything and buys nothing over an extended period, one of a few things is usually happening. They're winding down their portfolio for personal reasons. They've lost confidence in the market broadly, or they believe something is coming, macro or otherwise, that makes holding equities uncomfortable. I don't know which of those explains Kevin Hearn's behavior. That's the honest answer. What I do know is that a pattern of 15 plus consecutive sells with 0 buys from someone on the Ways and Means Committee is a pattern worth noting. So what this actually teaches you. Let me be direct about what you should actually do with all of this, because the wrong takeaway is to try to copy these trades, and I want to explain why. Lesson 1. The 45-day lag eliminates most of the edge. The Stock Act gives members 45 days to disclose. By the time you see the filing, the trade is history. If there was any informational advantage behind a move, that information has already been reflected in the price. You're not following smart money. Wise, you're following a timestamp. Lesson 2. The trade alone tells you almost nothing. The context tells you something. A senator selling Goldman Sachs is unremarkable data. A former Bridgewater CEO who married a Goldman executive, now sitting on the banking committee, selling Goldman at the top of a 2-year run. That's a different sentence. Same ticker, completely different meaning. This is why committee assignment is the most important variable in this entire dataset. Strip out the committee seat and you have a list of trades. Add it back and you have a question. Lesson 3. The real value is in understanding how information flows, not in chasing it. The lesson from Cisneros isn't buy defense stocks because he's buying them. The lesson is people with structural informational advantages behave differently than retail investors. They concentrate in sectors where their knowledge compounds. They hold for longer. They don't trade on headlines. They trade on the thing that eventually becomes a headline. That's a principle you can apply to your own process with the tools available to you without needing access to a congressional briefing. The Invyra Congress Tracker is live. Every trade, every trader, every ticker, updated in real time from Public Stock Act filings. You can cross-reference any of these positions against Invyra's models to see what the data says about the companies behind the trades. If you want to track what Congress is doing, and more importantly, understand what it means, the link is in the description.